Hey guys, in today's video we're going to talk about the 5 steps that you need to take in order to become a full-time trader. We're also going to take a look at some trading opportunities as always. So originally I had a different topic planned for this video, but earlier this week I got an email from a trader I work with saying, Akil, guess what? I just got funded and I wanted to share the news with you guys. Not just because I think it's cool, right? Another example of an average Jane and an average Joe working hard, developing a skill and putting themselves in a position where they can change their life, similar to what myself and Jason Greystone did. But I thought it was a perfect example to also walk you through the process and show you what you need to do if you want to do the same thing. Now, before we get started, I should introduce myself because I realize we do have new subscribers each and every week. My name is Akil Stokes. I'm a former struggling trader, well, probably more of a gambler at some points, but turned consistently profitable. I am one of the co-founders of Tier1Trading.com, which was mentioned in Forbes as one of the leaders in trading education. And this is a weekly video that I put out to you guys, giving you some tips that will help you do the same as myself, and also showing you some trading ideas that are on my radar. Now, if you like what you see, I literally put out new content every day of the week, so make sure you check out the other things that I'm doing as well. All right, so let's talk about these 5 steps needed to become a full-time trader. And before we get into that, let's talk about the word full-time trader, right? Understand, full-time trader doesn't mean that you have to live fully off of your trading income. It means that you could. And the reason I want to put that difference out there is because entrepreneurs, or not even entrepreneurs, in general, if you are familiar with wealth creation is all about creating and growing and accelerating your wealth from different revenue streams, right? Different avenues. So even if you can trade full time off of your trading, there's nothing wrong with supplementing that from other aspects of your life, other businesses, other markets, other ventures, whatever it may be. So I want to put that out there just so you don't think it has to be this one thing or it has to be this other thing. Now, step 1 is going to be explore. This is a step that many people don't talk about, but the exploration stage of trading is important. And this is kind of like where you're dipping your feet, right? You're checking out this, you're checking out that, you're looking at different strategies, you're looking at fundamentals, looking at technicals, you're looking at this trading educator versus that trading educator, and just trying to get a lay of the land, trying to see if there's a natural thing that you sort of gravitate to. Many of you guys that follow me on social media, you guys see my kids, right? They play all different types of sports. We've been doing tennis, we've been doing soccer, we've been doing football, we've been doing basketball. And the reason why I want to expose my kids to so many sports is so that they can make a decision, right? We don't want to specialize and say you have to do this because they're going to end up hating it. I want them to experience different things and kind of see what they like best, and then they'll naturally gravitate towards that, and when it's time, go all in on that. And trading should be the same way. So step 2 is going to be the learning process. After you've figured out kind of what path you want to go on, technical, fundamental, after you've tried out a few different mentors and coaches and kind of found someone that seems like it's the right fit for what you want to achieve, and really their philosophy on the market is it makes sense to you, this is where you learn how to trade, right? We focus on technical analysis, so we start from a technical aspect. What is the market? Why does the market move? How does the market move? Giving you guys some strategies, teaching you how to develop your own strategies, and that back testing phase, right? This is typically the longest phase of the journey, and some words of advice from not just myself but Stuart as well. If you shortcut it, it's just going to take you longer. And what I mean by that is, instead of focusing on learning how to trade, when I went through, I was focused on what to trade. And I ended up wasting a lot of time. I had a strategy, but I knew nothing more about the markets. And eventually I had to go back and restart and added just extra time to my journey. Take my advice, don't do it. I know many of you guys have similar experience. Feel free if you want to share and give some warning to the newer traders out there by leaving a comment in the comment section below. The next stage is going to be trading, right? After you've learned how to trade, now it's time to throw live money in the market. No, not exactly, right? The trading phase is actually a 2 or 3 step process, right? 1, you should do some type of forward trading or demo trading. This means practicing what you're doing not with real money, kind of just like a preseason match. There's nothing on the line, but you're kind of getting those reps in. And trust me, trading live is a little bit different than back testing. A lot of bit different, actually. And after you've traded live, or excuse me, after you traded demo for a time, you still don't necessarily want to jump into a live trading account with all your money. Something Stuart did very well was that he treated himself like a prop firm, meaning that he had an idea of what type of capital he ultimately wanted to trade with. But instead of putting it all into the account at once, or basing his position size and risk management off of that full capital, he broke it up into little segments. He said, hey, I'm going to give myself permission to trade this much. Once I've proven myself, I'm going to give myself permission to trade a little more. Once I've proven myself, give myself permission to trade a little bit more, right? We always say treat yourself like a prop firm. You have to earn the amount of capital that you trade. If you do that, it's going to be a lot easier to get over those psychological hurdles, because trust me, massive difference from trading no money to having real money at stake to having all your real money at stake. Trust me, it gets rough. Step number 4 is supplement. And this is a step that many people don't talk about. This is also a step that I think many traders don't understand, and because of that, they give up on themselves too early. It's a misconception out there that in order to be a successful trader, you have to trade full time off of your capital, right? Understand trading is a skill, right? Remember what we talked about earlier about wealth creation. Creating wealth is really about creating different revenue streams, right? Having money come in from different places so that it can support you in different ways or can help accelerate your overall wealth. The skill of trading is the same way, right? Yes, you can take that skill of trading and use it to trade for yourself, but you can actually grow many different businesses out of it. You can get funded by a prop firm, for example, with the skill of trading. You can manage money for others. You can set up an educational service where you teach people how to trade. You can set up a signal service, right? There are different ways that you can bring supplemental income in based off of that skill of trading, and it's not a negative if you do that. 4th is making the shift. Now, for those who want to become a full-time trader, for those who maybe have a 9-to-5 that they're trying to get out of, this is the shift, right? Once you've used those multiple revenue streams to kind of grow and accelerate your overall wealth, now you're in a position where you've probably grown your account, and now you can start shifting your normal 9-to-5 hours. I worked with a guy a few years ago who played it really, really smart. It was like a 3-year process, but he went from working full-time, went to working half-time, went to working quarter-time as his trading improved, and eventually quit and went full-time trading. And what he did was, as his trading account grew, as he got better as a trader and started to produce more profit, it now made up for the money that he would leave on the table from reducing the hours on his job. Now, obviously this guy can do both. He can probably trade full-time and work his job as well. But the key was he wanted freedom of time. He wanted to free up time so he could spend it with his grandkids and do other things, and basically have trading replace his normal salary, but with a much lower time commitment. So those are the 5 steps. If you have any questions about any of them or comments or things you want to share, feel free to leave it in the comment section below. At the very end of this video, after we look at the charts, I am going to come back and share with you an interview that Stuart did, and I'm going to pick out the 5 most important concepts and topics and lessons that he presented in that interview so that I can share it with you. And once again, you can have more motivation, more inspiration, more empowerment to do the same. All right, so let's hop into the charts, but before we do that, do me a favor, hit that like button, subscribe if you're new, and of course, give this a share on social media. All right, let's do it. So if you remember last week, we gave you a little bit of a heads up that this was going to be a very important week in the market, especially Tuesday and Wednesday in particular, as we had our most recent FOMC statement, FOMC press conference, projections, all of that fun stuff. And as you can see, they did not disappoint. The Fed actually came out more hawkish than what the market thought, talking about multiple rate increases by 2023, which is much earlier than what was initially projected. And even today on Friday afternoon, we're getting some FOMC members out there saying that, hey, we might even see 2022. So a very aggressive move, and you're seeing a lot of bullish strength over the last few days. And I'm recording this right now on a Friday afternoon, so I don't know how markets are going to close. My guess is we're going to see a little bit of profit taking before the week ends, and see some retracement, some brief ones. But in general, this is a good example of how I like to trade these type of moves, because as a younger trader, I used to try to trade the news, right? I used to actually sit at my computer when the news came out. I would look at what the market was doing and I'd try to react, and I end up losing money, right? I shared a few examples of that in past videos for you guys that check out the video each week. The newer, more mature, experienced me, I like to look for the aftermath. So I like to see the initial move, kind of get an idea for what I think the market's feel is, and I look to react off of that. I wait for the dust to settle and look for that next move. And what that encompasses this week, especially when it comes to analysis, is making a projection, asking myself the question, where do I think price is going to go? And then based off that prediction, right, I can then discover how do I want to attack it, or if I can attack it at all. And something that I'm going to use to help is going to be our VS1 levels, right? You guys know I'm a structure trader. If you guys are new to the channel, structure is my backbone, support, resistance, supply, demand, all of that fun stuff. Everything in my trading plan revolves around that. So it's very important to me, especially when it comes to making predictions. And fortunately, right, I work with some pretty cool people, some pretty awesome coders. They were able to code for me a pretty cool indicator that gives me a visual representation of those support and resistance levels, those main ones. And I can configure it to how I want, but for today's purposes, we're gonna focus on the main one. So I'm gonna click up here on my screen. I'm on Ninja Trader, by the way. I bounce back and forth between Ninja and TradingView if this looks a little different than the previous videos. And I'm gonna put on my VS1 zones, and you should see, boom, there we go. Some purple and blue boxes appear on your screen. And these are just gonna give me a visual representation of where to project price to go to next. And you can see we have a level of overlapping structure here on the euro dollar daily, but the level that stands out to me, because it's the first level, is going to be this first smaller VS1 zone right here, the skinny rectangle at the top of the big one. And actually this overlap is going to be very important as well, especially seeing how it lines up at an even handled number, right? Look on the right hand side of the screen. What we mean by even handle numbers are psychological numbers, numbers that end in 00. So you can see 117. Nothing really important about those levels in general, aside from the fact that us as human beings, we like numbers that are symmetrical, that are easy to understand. So we tend to make moves, whether we know it or whether we don't know it, or decisions, I should say, off of those levels. And smart money knows that. Smart money also knows it's a great place to bait traders. So it then becomes important to them as well. So now that I've identified, or at least I've made the prediction on where I think price is likely to go, now I have two options, right? For a structure trader, a counter trend trader, one looking to catch really fade this current move. If price action comes down to this level, I know that this is a level I'm going to be looking for long opportunities at. On the other hand, and assuming we stay like this, something I could do intraday in the markets next week is I can be a continuation trader in advance of that level. Price is currently trading at 118.73s. My projection has been going down to 117s. That's 173 pips of potential move to the downside, not counting any type of small retracement we get in the market before that next extension lower. And based off what we're seeing on the lower time frames, go down to a 4-hour, I would expect some type of relief. As you can see, the momentum is starting to slow. So I can look at this in two different ways. I can look at this as a pullback trader who is waiting for a little bit of relief and looking to catch the next move down. And then of course, once or if price does get to that level, I can put my structure-based kind of counter trading hat on and look for a short reversal off of that zone. Next, we're gonna head over to the Aussie dollar, similar situation, but price is at a little bit of a different point. This pair has actually completed a head and shoulders pattern. What else is new for you guys that join me each and every day, right? We've been joking all year round that if you look at this on the daily, but more so on the lower time frames, there have been like 100 head and shoulder patterns in this range of 2021. But you can see the bigger one has formed here on the daily, right? Left shoulder here, head right here, this elongated right shoulder here. And again, there are smaller ones inside of this, but You can see the VS1 zone, that purple box. Currently, again, Friday afternoon, we got about 2.5 hours left. You know, we may see some retracement, but currently we are breaking and closing below it. If we can maintain that type of price action, that's going to give me a violation of structure. If I see a violation of structure, then I can predict a move to the downside. Now, the one thing that's tricky here, I would say this: if we go down to the downside, if you're looking at VS1 zone to VS1 zone, you're going to say, holy crap, there's a lot of move all the way down to 70 cent. I wouldn't be that ambitious. I'm not that aggressive as a trader. Especially in a direction that is not with the underlying trend, right? If we zoom out, we are not in a bearish trend, bigger picture. So it's going to be tough for me to I wouldn't shoot for a reversal down to that area. I would look for the next major inside level of structure. And you can see, again, zooming out a little bit, if we look at these two VS1 levels lined up, this smaller blue box right here and this longer blue box right there, that's going to give me a good idea at where that next lower level may be. So same thing we talked about at euro dollar. I can look for a retracement back into that neckline and a chance to trade it down to here initially. And of course, if we violate that level, I can then look to go lower. Now, one thing you do have to keep on your radar is this is going to be a sneaky level that may become an obstacle. But if we maintain that violation of the neckline on Aussie dollar, I still think we can see that push lower, 74 cent, and then 70 would be ultimate, but probably one more right in here about 72.50s before that. So 74, 72.50s, and then down to 70 cent even. Lastly, we're going to head over to the New Zealand dollar. Similar situation as the Aussie dollar. I'm going to go ahead and bring my VS1 levels up one more time. You can see we're currently trading at one. This one looks as if it has a better chance of holding at that level. So again, euro dollar, we kind of showed you an opportunity in the middle of no man's land. Aussie dollar, we kind of showed you an opportunity where we're probably going to get a break. This is one where we're probably going to get a hold. So if we hold that level, I'm going to look for a short-term reversal, a little bit of relief on the way up. And I think this is a decent opportunity because here on the daily, we've put in a pretty much a straight move down, right? Over the last 1, 2, 3, 4, 5 out of the last 6 days have been strong bearish days. And that means there's not a lot of kind of ebb and flow weirdness in the middle of it. So if we do look for a reversal, right, I have a clear level of structure right here, the bottom of this previous structure shelf. You can see that if I just elongate that to the left, we had a similar action over there. I can make a prediction that price is likely to retrace back up to this level, right? Lo and behold, look right, what do we have? Another even handled number in 71 cent even. And I bet, I haven't done this yet because I want to wait till the candle closes, but I bet we're going to have a 50% retracement there as well. If we take our Fibonacci retracement tool from the swing high to the swing low, make me look good, make me look good. Talk to me, baby. Ooh, right on there, 50% retracement as well. So pretty decent level that I think price can retrace to if we hold this structure level. If we break this structure level, or violate, I should say, then we're in the same case as the Aussie dollar where I would expect that continuation lower. We can wait for that pullback and look to trade it low. So 3 different opportunities. And the cool thing about this is they're all similar yet different at the same time, but the focus is on that predictive phase. I'm going to share a few my favorite parts of the interview that Stuart did about getting funded and whatnot. And one of the things he talked about is a systematic process. And when you put yourself in a systematic process where I don't have to outthink the markets, I don't have to do anything fancy, I'm just simply, hey, if then, it makes trading so much easier. Again, go back and watch this video, look at each of these scenarios. All it is where is structure? If we do this at structure, then I think this. If we do that at structure, then I'll look for that. It is pretty simple. It is like like I'm walking on a flow chart where I'm in the chart. I look at it. Boom. If this happens, I go over there. Boom. If this happens, I go over there. I'm just following the path that is already outlined, the path that took me so long to create, to backtest, to confirm. But now I can use it consistently day in and day out of the market to extract profits. You put in the work, you get the result. And not to spoil too much of Stuart's interviews, but when you have that confidence in yourself, along with some other things, you really become unstoppable, or at least give yourself the chance to become unstoppable in the market. So recently, Stuart did an interview where he was asked some questions kind of about his journey and what does he think made him successful. And I'll link the interview below in the description box. And I definitely think it is a must read for every trader out there, or every trader out there that wants or aspires to be successful, whether it's for yourself, whether it's managing money, whether it's becoming funded. There are some fantastic lessons, and it's from someone who just did it, and I think it's pretty cool to read. It's a really short one too for you guys that have the shiny thing syndrome, but 5 takeaways that I took from it. So 5 lessons that I want to present to you for you guys that won't read it, because I know not all of you will. 1, Stuart says, having a repeatable, verifiable trading plan means I can consistently enter the market knowing that the big picture probabilities are in my favor. And I can tell you, one of the biggest hurdles or the biggest weights on a newer trader's shoulder is the fact that they have so much worry over the outcome of the trade, right? And it's not just the outcome of the trade, it's worry over, am I doing it the right way? Is it this? Is it that? I can tell you what, when you have complete confidence in what you're doing, when you essentially know that, hey, I may not know the outcome of this single trade, but I know the outcome of the entirety of my trades, you become fearless. And when you become fearless, you do the things you're supposed to do to make money. And that is very important. Number 2 is going to be, he says, the value of each trade is so small that the individual win or losses don't matter. It's the bigger picture when they all add up that does. And trading small is big. I was told the same thing from my mentor. You should trade so small that a win doesn't make you happy, a loss doesn't make you sad, right? It has no monetary or financial impact on your life. And once again, when you are in that situation, you can trade free, right? Most of our psychological mistakes are made because we get greedy because of wins, we get fearful because of losses, we take revenge, all of that fun stuff. When, money is a big, massive emotional driver, when we can take money out of the equation, we remove one of the biggest threats to our trading psychology and to our trading results. So trade so small that it doesn't matter. Next, he said, my first live trade, putting real money, I think he was asking him what was his scariest moment. He said, my first live trade, putting real money on the line for the first time. It's scary stuff. I actually lost. But my second trade won bigger than the initial one, and that just reaffirmed I was doing the right thing. And 2 great lessons here. 1, keep your losses small, keep your wins bigger. Doesn't mean super big, but in general, right, when you lose, you should lose less than what you make when you win. Because you're going to lose. It's going to happen. There's nothing you can do about it. But those wins should make up for it and boost you to new equity highs. Another thing that caught my attention was the fact that he said reaffirmed, because he noticed that, hey, my first live trade, it's scary, right? It is different. I've done all the work. I've done everything correctly. I've had the blessing of my coaches and mentors. But still, when you get out there and you do it with live money for the first time, it is frightening. And especially to take a loss right away, it is very easy for those doubts to seep in. But getting that next win and seeing that, wait a minute, I lost one and then I won one, so I'm 50%, right? Which isn't bad, but the internet will make you believe you have to be 90% or you're horrible. I'm 50%, yet I still made money. Wow, I don't have to win at a crazy rate in order to be profitable. And when you take that pressure of not needing to win away from you, again, another psychological barrier removed. So the last one I want to share with you is actually a recommendation that Stuart gave to anyone who's aspiring to do the same thing. And he says, have your trading plan in place and have at least a few months of live trading that shows you can achieve success. And I think the first part is a given. If you don't have a trading plan, you're not going to be successful. There's no ifs, ands, or buts about it. It's black or white. Trading plan, you give yourself a chance for success. No trading plan, you're going to fail. It is what it is. But get some live trading under your belt, right? This is what we talked about earlier. There is a difference between back testing and demo trading. There is a difference between demo trading and live trading. You have to get used to those emotional differences. I just heard an interview the other day with Jimmy Johnson, I believe it was. He's a famous NASCAR driver who's going into the Indy circuit. And he knew it was going to be a difficult switch because NASCARs and Indy cars are different. But he said, hey, I'll probably go into this being about 60% ready. I'm a Hall of Fame professional driver. How different can it be? And when he first started training on the Indy circuit, right, he only knew about 20%. He was so underprepared and he didn't even realize it. It's just a different game, even though it's the same concept, you're driving. And demo trading and live trading is the same thing. It seems like it should be exactly the same, but trust me, for anyone that has made the leap, it is not. There are so many small variables and those things add up, and you have to give yourself time to adjust. not only on the technical side of things, but on the emotional, psychological side of things. You have to build that confidence. And if you're going to be someone that goes on to try and get funded for a prop firm, and you've got to go through a series of performance-based tests, that's another added pressure on you, right? And you have to be calm, cool, and collective in order to steady the ship while having that pressure of these expectations on you. So cool stuff. Read the article. I'll link it below. If anyone has anything to add, maybe you're someone that is funded as well, or you're on the journey of being funded, or maybe you're just someone that went from being a struggling to consistently profitable trader, leave a comment below. Help the newer... So unprofessional. So do me a favor, leave a comment below, help the newer traders that are watching this channel out. We do a great job of that over at Tier 1. I know the rest of the internet is kind of a scary place, but if we can make this YouTube channel a safe place as well, where you can get actual advice that's going to help you and empower you and motivate you to become a consistently profitable trader, then I would like to do that. Until next time, plan your trade, trade your plan, like, subscribe, share, enjoy your weekend. I'll see you guys next week.